with the reality that interest rates are going to be cut sometime in 2024. There are definitely certain sectors within the stock market that are going to be a little bit more sensitive to higher or lower interest rates. And in today's video, we're going to be talking about a dividend growth ETF that is in fact extremely sensitive to higher than ideal interest rates. Now, for example, looking out to November this year, you can see right here that the Fed rate monitoring tool is pricing in a good chance that interest rates are going to be between 4.5 and 4.75%. And to be fair, there's even a smaller probability that interest rates could be even lower than that. Now, if you consider yourself a dividend growth investor, stick around because this ETF could see some massive growth throughout this year. I just finished my brand new dividend investing ebook where I share exactly how I went from zero to now over 7 figures invested, and also on how I earned more than $6,000 per month in dividends. I also finished my custom dividend tracker that you can use to track your dividend income progress on an ongoing basis. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now, the ETF that we're talking about, the ETF and the sector that is of course very sensitive to interest rates being higher than ideal, is ticker symbol VNQ, or the Vanguard Real Estate ETF. Now, before we dig into VNQ, if you guys aren't really aware, real estate is very sensitive to higher interest rates because real estate investment trusts, or REITs, which basically make up the Vanguard Real Estate ETF, do leverage debt to not only expand and grow their REITs even larger, but of course to service the loans they already have within their real estate portfolio. So this means that if and when sometime in the future rates get cut lower and lower, it's only going to benefit real estate across the board. Now, right here on the Vanguard website, it says VNQ, product summary. Invest in stocks issued by real estate investment trusts, or REITs, companies that purchase office buildings, hotels, and other real estate, etc. Now, VNQ offers a high potential for investment income and some growth. Share value rises and falls more sharply than that of funds holding bonds, of course. Now, if we look at VNQ and how the ETF has performed on a longer time frame, you can see that basically ever since the Federal Reserve started raising interest rates, VNQ, because of all the real estate investment trusts that make up this ETF, have slowly been trading lower and lower. Now, just as of recently, right here towards the end of last year, there was a lot of hope, a big probability that interest rates are going to be cut sometime coming soon here. So investors started to pile back into REITs, making VNQ's price move up around $10+. Now, overall in the max time frame, you can see that VNQ is not necessarily an ETF that grows extremely fast, considering since about 2008-2009, the ETF has just around doubled in ETF price. But keep in mind, VNQ does have a very nice frothy starting dividend and does hold a super high quality basket of holdings, which I'm going to show you here in a second. Now, another important aspect for VNQ is if you want to have exposure to some of the best real estate investment trusts all in one package, you are going to have to pay a 0.12% expense ratio. Now, even though 0.12% is a bit more expensive than something like VOO, SHG, or VYM, 0.12% is honestly fair in my opinion, and I hold a ton of VNQ in my portfolio. Now, here's the important part. If you are an investor that does want exposure to some super high quality real estate, but don't really want to necessarily pick and choose exactly which REITs to buy, because let's be real here, it takes a lot of research and a lot of time to do so. That's exactly why I think VNQ could be a great option to have some exposure to in your portfolio if you do have an interest in real estate. Now, for me personally, I love real estate because I love cash flow consistently, and I do think that over the long term, real estate prices are going to continue to go up. So for a long-term buy and hold, I think it's a great option. But I think it's also very important to look at some of the top REITs within VNQ just to give you an idea of what you're getting exposure to. And like I said, for the most part, these are some super high quality names. So the most exposure is to the Vanguard Real Estate 2 Index, that's 13% of VNQ. Then we have Prologis, which is 7.6%, American Tower, which is one of my favorite REITs, 5.95%. Then we have Equinix Inc., that's 5%, Crown Castle, that's around 3%. We have Simon Property Group, another one of my favorites, 2.9%. We have a ton of realty income, almost 3% of that. Public Storage, Welltower, Digital Trust, around 2 to 3% of those. Now, all in all, VNQ does have 163 different holdings throughout the entire ETF. So like I promised, by buying shares of VNQ, you are getting a very diversified taste in the real estate sector. And just for 0.12% expense ratio, they are going to do their best to keep rebalancing this portfolio over time and giving some great exposure to some of the best names out there. Now, we talked about how VNQ has not really grown the fastest as far as price return goes over the long term, but I promise that VNQ does offer a nice juicy dividend for the start. Now, VNQ's trailing 12-month dividend yield, which is especially juicy because of how low VNQ is trading just as of recently, especially over the last year, once again, since interest rates have been a bit higher. VNQ is offering a 4.14% trailing 12-month. Now, across the market right now, you can easily get a well above this starting yield if you want to buy into something like realty income or even names like National Retail. But still, within VNQ, there are some low yielder names that do have some more growth potential, so all in all, evened out 4.14% is not bad. Now, this is another one of the things I'm not exactly super excited about when it comes to VNQ, and this is sort of the lack of dividend growth over time. Now, you can see back years ago, VNQ was offering super high dividends. This was pre-2008. But since then, VNQ's dividends have been a little bit smaller, and although they are going up into the right over time, there's not any substantial dividend growth here. Now, this is also because a lot of real estate investment trusts don't have the fastest dividend growth historically, although there are some names out there that VNQ does hold in the portfolio that do have some faster dividend growth than others. All in all, to say that if you want exposure in an ETF with some super fast dividend growth historically, well, VNQ might not necessarily fully tick off exactly what you're looking for. Now, looking at VNQ's performance over time, and this is total return, so this is dividends plus price return included. And before I even show you all this, remember, I think VNQ is a buying opportunity because I personally think it's going to have some more upside from here. VNQ has not performed all that well because real estate investment trusts have been held down for quite some time now due to interest rates being higher than ideal, but I do think personally that if interest rates get cut substantially in the next year or two, I think a lot of the names within this group are going to flourish, but of course I could be wrong. But over the last year, VNQ is down 1.6%, S&P of course is up 22%. The last 3 years, VNQ is up 5.75%, all while the S&P is up 27%. And over the last 5 years, VNQ is up almost 20, where S&P is up over 80. So again, I repeat, VNQ has not performed all that well as of recently, but I do think for the investors out there that want some exposure to some high quality real estate investment trusts, VNQ in my opinion could see some growth possibly and easily be trading back above $100 per share if interest rates get cut in some timely manner here. So now that we talked about the Vanguard Real Estate ETF, we talked about how this ETF works, some of the top holdings in VNQ, and of course why I think this ETF could see some massive growth if interest rates get cut in a timely manner here. Now I want to hear from you guys down below. Do you currently own any VNQ and have any of it in your portfolio? And if not, what is your number one favorite real estate investment trust that you're holding as of right now? If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.